Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.
Welcome back to Kitco Mining's ongoing coverage of Xplor 2024 in Montreal. My next guest is Matt Manson, CEO and President of Radisson Mining Resources. Matt, welcome.
Well, thank you. Thanks for having me.
So I guess the logical place to start is you've had a lot of news coming out in the last few months and even in the last few days. But Radisson has had some very important additions to the management team and also to the board. So could you tell us, including, of course, yourself. So can you tell us a little bit about that? What's the strategy there?
Yeah, so I'd call this a reshaping of the leadership team. The board has been reshaped from May and June last year. Pierre Baudouin, and many people will know as the builder of Canada's biggest gold mine, Detour, and more recently Silvercrest in Mexico. He stepped up as the chairperson. Peter MacPhail, somebody I worked with at Marathon Gold, my predecessor company, who was the chair there. Peter, previously Chief Operating Officer of Alamos, also a mine builder. He joined the board. I came on as CEO beginning of July. So we're all relatively new. There's Lee Chenard and Cynthia Valence, two new faces also on our board, both with a good track record of mine development, mine exploration, community relations in Quebec. So at this stage, yeah, we've built a very credible leadership team and board to take Radisson to the next stage. And I also mentioned Dave Ross is the newest member of the team as VP Exploration. Dave was VP Exploration and Resources for me at Marathon Gold, and then subsequently Calibre. So he's joining us with a wealth of experience also in structurally hosted gold deposits. So we've got an A-lister team here at this stage.
Right. So clearly, this is things are going in the direction where you're now ready for this type of a team, these types of people.
Yeah, look, I mean, Radisson has been around for a while. All right, many people will know it as the old O'Brien mine on the Abitibi. Radisson has been drilling it for many years, slowly adding ounces in this brownfield location. So now it's got to the stage where at 1 million ounces and still growing with the type of grades we've got, 10 grams in the indicated resource, 8.5 in the inferred, that's the same size as the most recent project in the Abitibi to be developed, achieved. And that was the Lapa deposit at Nico Eagle's mine. Same grade, same type of mineralizing style, Cadillac Larder Lake break, quartz sulfide veins gold, same metallurgy. It was successful at about 100,000 ounces a year by being developed and then trucked to the nearby La Ronde mill. So Lapa is immediately to the east of us, La Ronde is immediately to the west of us. That's our model. So that's how we see O'Brien. All these new people that have arrived see it as a potential satellite supplier of ore to one of the 5 mills owned by 4 companies that are immediately surrounding us in the Abitibi. So we see this as, yes, an exploration story. The drilling is going very well, and we'll talk about that. We see upwards of 3 million ounces here eventually. That's the trajectory we're on. But at the stage we're at now, we can also start thinking about it as a development story as well. And we think there's a clever way to do the development without it becoming a big standalone project. We don't see the reason for a new mill here, a new tailings facility. We see it as going to one of these other existing mills.
All right. Yes. No. I saw one of the most recent announcements is along those lines.
Right.
I also wanted to touch on you just closed $7 million in equity financing, right? And this was started at 3, I think went up to 6, and now it's closed a little over 7. So tell me a little bit about that. How much of that was insider and ownership?
Well, I subscribed to it. My CFO, Hubert, subscribed to it as well. Really, it was, the stock had done very well. We saw an opportunity. We had about $3 million of orders sitting there. People who had put their hand up and said, when you finance, let us know. So we launched the deal with $3 million, knowing that once we'd launched it, it would go bigger. It upsized to 6 and then 7 pretty quickly. We closed it at 7. Non-brokered, did it ourselves. Very successful, right? It was all people we knew, people we developed a relationship with. One of the benefits of doing a non-brokered financing is you get to see the book, right? So you get to know who your shareholders are, which is important. Yeah, and very successful. Michael Gentili, of course, who I know you know, is a big shareholder of our company, 6-7%, also on the board. A fantastic resource within the team in terms of his network and his contacts and his perspective on the capital markets. So in terms of overall ownership in this company, it's about 9%. I've bought about 3.5 million shares since I came in as CEO in July, just on the market. and then a little bit on that financing. So I mean, 9% actually is a pretty high ownership level for a company that's been around for more than 20 years now. None of the original founders of this company are involved anymore in the board and management team. So that's a pretty healthy position of ownership. All purchased.
All buying into the stake as they arrive. Yeah. All right. Now let's talk about the O'Brien project. So latest drilling results actually were announced today. So it's nice that we get a hold of you right now. So what's the latest there?
Well, O'Brien is a series of relatively narrow but very high-grade veins that periodically coalesce and thicken out and give you these high-grade pant legs. And the company has been drilling at a mixture of shallow depths within holes in our existing model, and now more and more stepping out with some more courage, I'd say, below the existing resource, drilling where we don't have gold, rather than trying to patch holes within the model. And so that drop of drill results we put out this morning was a mixture of both, targeting holes in the model to add ounces at shallow depths, but also step outs. And at the end of September, we had a press release with 3 drill holes that were offensive holes, west, central, and east, about 170 meters below the bottom of the previous drilling. And those lit up. 2 of those 3 holes hit. One hit with almost an ounce, over 6 meters. That's that high-grade pant leg coming down. So when we say that we're targeting 3 million ounces here, that's with the confidence that this deposit style is continuing to depth. We think 2 kilometers is the natural exploration horizon. If you add up where our trends 0, 1, and 2, and that'll make sense if you go to our website and look at our presentation and look to see what I mean by 0, 1, and 2. If 0, 1, and 2 go down 2 kilometers, if the old mine continues below its historical workings and goes to that depth, that's 3 million ounces there, right? Everything else left and right of that is gravy. So we're drilling in those deeper areas, stepping out, again, drilling where we don't have ounces, and having success. We said in the press release this morning that for the first time ever in the 25-year history of this project with Radisson, we are drilling below the workings of the old mine. Just for your viewers, the O'Brien mine was famous for being the richest gold mine in its time in Quebec. It produced these museum-quality visible gold samples that are now in the Royal Ontario Museum collection. They're all over our PowerPoint presentation. And that's what the old mine was characterized by. It stopped at a kilometer because back in the 50s, the gold price was fixed, and that was the natural economic boundary. You couldn't go any further. So nobody's drilled below that stop. So we're putting the first hole ever. It's now at about 1,700 meters. I think it's coming through the mineralized sequence of rocks, what's called the Piché group, at about 1,500 meters vertical depth. That's 500 meters or so below the old mine. Never been done before. Fingers crossed. Right, high risk, high return drilling this, but I think the new team, all these new faces, are coming in with a bit of a license now to do that kind of thing. And if we hit at those depths, and this is mesothermal gold, there's nothing geologically to say it doesn't continue down there. It's going to change the scope of this project. We know we're hitting at depth with 170 meter step outs below our existing resource. Here's a 500 meter step out below the old mine. Let's see what we get. So the depth. The going down, adding ounces at depth is very much where our exploration is heading, and that press release today, the press release in September, hopefully future press releases are telling that story.
Okay, so concretely it's 1 million, but very realistically it's 3 million potential ounces. Yeah. If what this deeper drilling is showing you is consistent with what you already know.
Yeah. As explorationists, setting out what's the target, what's the purpose of doing this exploration, 3 million is a reasonable target. Now it's going to take a lot of drilling. These are narrow, high-grade veins, so historically that takes a lot of drilling before it's a mineable resource. You've got to do your info, you've got to know where it's going, you've got to measure continuity. But as explorationists, again, thinking about the geological style, thinking about what we've got already, thinking about where things are going, 3 million is the target, right? And I think we have line of sight to how we can achieve that.
All right, now, and when you get to that stage, one of the recent announcements was you've signed a memorandum of understanding with IAMGOLD. So this comes back. Well, last year we were speaking with Radisson, and And we were hearing that as far as the timeline, building a new mill versus working with some existing infrastructure, it's a big difference. So this is so what's the latest here? This is a memorandum of understanding with IAMGOLD, looking at potentially using existing infrastructure in the area.
Right. So again, the stated objective of this company is we don't want to build our own mill. We don't want to build our own tailings facility. There's 5 mills and tailings facilities around us, all within driving distance, right? There's more if you add in Malartic. There's 6. We don't see Malartic as a candidate. That's a different beast. So 5 of them, right? Looking around, Doyen and the Westwood mine. Doyen is the mill from the Doyen mine, built by Cambrior back in the day, now being used to process Westwood ore by IAMGOLD. That's a natural candidate for us. IAMGOLD's stated objective is to find additional supplies of ore for that mill. It's got about a 3,000 ton a day capacity. Westwood's doing about 1,000 tons a day into it, well, profitably, but there's capacity there. And so here we are, 15 minutes down the highway, with 1,000 tons a day potentially of high-grade ore coming from O'Brien, right? You put all that together and you've got a pretty good operation there. So that's a natural one for us to look at. The MOU, so, consistent with what IAMGOLD have said publicly they're trying to achieve, consistent with what we've said, we got together with IAMGOLD. The first step is to do an MOU under which we're doing the technical evaluation of our ore going through their mill and into their tailings facility. And that's non-trivial. We've got to look at the design criteria for the flow sheet. We've got to think about how our metallurgy gets handled. We've got to do the metallurgical work to understand how our ore will behave in their facility, what costs and arrangements are required to do that, and then what is the tailings deposition strategy as well, which is another non-trivial thing. So the first step is to get all that worked out. The 2 teams, the Radisson team, we're working with Senko on this, and the IAMGOLD team are working well together. That's going ahead and going well. And relatively soon, I hope we have a good understanding of how that's going to work out, how that's going to be arranged. And then we'll understand, having established that as a viable direction for our ore, the next stage will be to have the conversation, the business conversation as to how that's to be achieved. The MOU doesn't have any terms on commercial relationship between the parties. It's non-exclusive, it's non-binding.
It's viability.
It's just the technical viability of our ore and their mill and their tailings facility. But, at this stage, we don't see any red flags, and it's a natural destination for us. So, again, if O'Brien is just the underground mine, minimal surface facilities, we don't need a camp, we don't need a major equipment facility because we're so close to town, no mill, no major earthworks, no infrastructure, we're right beside the highway, the power's right there. It's these grades, the type of resource we see, the margin we can get in that type of ore, especially in this gold market, it's a fantastic proposition. Yeah, this is why we're all here, right?
That's right. Because when we were speaking last year, it was very much about the potential. So we didn't have these new drilling results either, but we had look at this grade, and the prices were maybe 1,800. We were going towards 1,800, something in that area. So everything has gotten only better. Everything, the underlying picture has gotten only stronger. You have all these potential partnerships in the area, and then you have very encouraging drilling results. So it's
yes, and we got money in the bank. It's the complete picture.
Yeah. That's great. So then, you're getting results. You're getting announcements every week, every few days. What should we be looking forward to for the end of this year and into 2025?
So I think the drilling is the day job, right? So that financing we just did is going to give us a healthy program for all of next year. So we're fully funded to the end of next year for drilling, and I think very much our drilling is going to go deeper. We're going to do these bigger step outs, trying to sort of demonstrate the potential at depth of blue sky, and that's going to be the focus, right? And that's we got a 35,000 meter program this year that's going to go until the end of the year, and then we start with the new program next year. It'll be seamless going through, right? The MOU work with IAMGOLD and the metallurgical works behind it is going to result in a bunch of disclosure towards the end of the year or into first quarter of next year. So we want to talk about that, how that's going to work, how we conceive of that. And then I think when we've got that done, we got all the makings of a PEA, the first public economic study for this project, where we show, I think, the market what 1,000 tons a day at these grades going into a mill without having to build those facilities, what that looks like economically and value-wise, right? So I think it'll be important for us to get that out into the market. That'll be important. And then I think 25 is going to be, the business year, right? What can we do in terms of these pieces around us, and what business relationship can be established there to put all that in place? I think we're ready for that. But again, look, drilling throughout, right? I feel like we're still in that kind of, even though the company's been around for many years, we're still in that kind of upwards curve here in discovery, right? Because we're having, 170 meter drill hole, well, drill holes 170 meters below the previous drill hole, still within the scope of the historic shaft that's in the old mine, giving us almost an ounce over 6 meters, right? We can still produce that with another kilometer below there, viable exploration horizon. So, keeping that front and center, that part of our story is going to be really important in 25. But with all this other judicious, careful, sensible, value-creating development work kind of going on in the background.
So then you said around first quarter you should have a sense of whether the Doyon mill would be a good fit in terms of viability?
Yeah, we've been careful to say in IAMGOLD as well that there's no guarantees here, right? Nothing is set in stone, nothing is certain. But we don't see any red flags at this stage. The technical viability, we're just establishing the design criteria, the basis of estimate. How is it going to? We're going to spend a little bit of money in the mill to do this, and how is that going to work, and how are we going to manage the tailing strategy, things like that. So that has to be worked out to everyone's satisfaction. But again, don't see any red flags in that at this stage. And then once that's established, we can do that economic study that shows the value of that. There are projects out there that are aspiring to have their ore in somebody else's mill, but they don't have the agreement. They don't have the relationship, and so they're kind of stuck because they can't show what their project is worth doing that. They can't bring out an economic study that shows that if they don't have the cooperation of the mill owner, for example, and whatever relationship that's going to be. So we're getting that sorted first, right, before we bring out any economic statement. But so that parcel of work is going to be an important milestone for us, I think. But if you ask me right now, what's exciting me the most is the drilling.
Just the expansion of the potential of the mine itself.
It's drilling at depth, right? It's the exploration excitement, right? It's looking at fresh core and seeing gold in it, and realizing it's open. You can't beat that. That's where we are, I think, right now.
It's a good place to be.
Yeah.
All right. Well, thank you so much for joining us today. It sounds like we should be in touch, and maybe we'll circle back with you early in the new year. You'll have some more. You'll have some more updates for us.
Absolutely. Yeah. Thank you.
I'm Ernest Hoffman for Kitco Mining. Keep it here for more coverage from Xplor 2024 in Montreal.
Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.